Good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, December 13th, 2021. The NASDAQ had a bit of a reversal today, and it did not make a new high above 16,423 or 38, whatever this high was, 37 from last Wednesday. So as I had left it during last night's update, that the market needed to prove itself by pushing back above 16,437, with the rally then continuing as it started to head up towards that little bit stronger resistance at 16,630. That did not happen. It got as high as 16,414 and then reversed. So what is the prognosis on what really is going on here? So what I can best come up with right now is that the NASDAQ is doing a little bit of a larger, more complex fourth wave correction. So we had, or I had put the 4 here for the minute 4. That was 3 waves down, but this is being left as 3 waves up. So this would be A, and that's a B, and then we got a 1, 2, 3, 4, 5 for the C wave. So it fits very cleanly. But here's the good news, is that it looks like we may have already done the C wave down. I can count 1, 2, 3, 4, 5. Let me bring that down to the 15-minute chart. Let's just take a cleaner look at those internals. And we can see, yep, 1, 2, big 3, nice 4, and then a 5. If indeed the 5 is complete at this low. Still to be determined. So here's what I think we need to look for tomorrow. If this all is going to pan out and I move the 4 from there over to here, or to wherever this particular sequence finishes, we have to leave open that this is going to be a 1, 2, 3, and this is a little 4, and we get one more little downturn, hopefully that it would find support, and I'll go back out to the 30-minute chart. It's going to find support at 52, 53, or somewhere around 20 to 25, 16,020 to 25. I really don't want to see it come drifting down too much, and that no break zone remains at 15,809. So that's why we're going to give the market the benefit of the doubt that it's just doing a more complex, more extended fourth wave correction before it again returns to the rally, then eventually does break this high at 16,437 and continues to move higher on its path to new all-time highs. So those are going to remain in the picture for right now. So, but the only other choice, should this really come down, now that's the next no break zone. Anything in between, we may have to accept as it being corrective, and the market's now going to zip and rally strongly again. And so I'll work it out, but that's the picture right now, that it's either going to hold here, it cannot break below here, and then continue the rally. So we're going to continue to look for these levels to hold. I'm really not looking for this 1.382, or certainly not looking for 1.618, not in a fourth wave. Then it's really coming too far. I have to allow, under Elliott guidelines, a move down to 15,809. And that's what I will do. So below that, the highs are in, we're off to the races to the downside to finish a larger C wave. So right now, though, I really do feel that this is just corrective, and that we are going to return to, and the rally will come back and likely will come in very strong. Today was a very strong down day. So there were moments where they were lining back up to come into Apple. Apple was above 180. It was above 181 this morning. And Amazon was higher, Google was higher, Facebook was up $10 or $11. still managing to close up almost 5. So the plays that we see on the weekly options remain. This next Friday, on the 17th, is the monthly expiration. So more, practically all of the stocks do come into play in terms of how they may determine where they're going to push it and how high this all goes. So it is the last monthly expiration for the year. And I think after this Friday, we will see a lot of position adjustments for year end. So a lot of year end marking, a year end flattening some positions, getting into new positions, et cetera, et cetera. But I think we're going to see a lot of shifting around in that final 2 weeks of the year. Plus, combined within that is the Christmas holiday and the New Year's holiday. So a lot of work to be done, I think, by a lot of different funds and players and traders, et cetera. So, but for tomorrow, I am looking for possibly some small additional downside. I'm looking for 16,053 down to 16,020 to basically contain it. If this low that we got after the close at 63.75 does not hold, if they begin to just rally the market back up, then we'll be in much better shape to put that low there, move the 4 over to here, and we would look for confirmation on the hourly chart of 5 waves up. So as soon as I can start to get that, then I'm going to be much more comfortable that that low is in, and we're now going to start building back on the rally and the advance and put in that 5th wave up. Support continues to be found at these levels. I'm leaving them there because they're all a part of this particular wave versus this wave. So if this is A and this is C, it's going to be C versus A, and that's where all of that still comes into play. But in terms of this being a continuing 5-wave advance, that would be determined, because remember, we still have that outside view, which was the preferred view, became the alternate view in favor of this 5-wave advance continuing, but we still may be leaving all of this. This 4 goes back to here, the 3 goes back to there, all of the 5 sequences are complete there, and this is a A wave, this is a B wave, and now we're in a much larger C wave down. So we're running everything concurrently because the market isn't actually telling us or confirming which is in play right now. If I had to lay odds on the probability of it being A, B, and a C wave down, I think they've just shifted. Today's reversal was strong enough in the broader markets to bring that back to the forefront, to bring that back to the front of the line as a very strong possibility. I'm not making any changes yet. I'm going to let the market tell me. Unfortunately, with the NASDAQ, that's going to come on a break below that level that I gave you, the 15,809. And that is where I'm looking. And believe me, there will be plenty more to do should that be the case, and it comes down and it does break there. So if this is indeed ABC, and this is 1, and this was a 2, but and it likely could be because it's an ABC, then we're dropping in a 3rd, and that 3rd is not anywhere near being done. If I had to consider this a 3rd wave, this is just getting started. 1, 2, when we're dropping in a 3rd. So that's the coin. Flip it, see what comes up. Market will tell us. So if it's a stronger downside, it's not going to have any problem breaking that 15,809. In fact, it won't have any problem breaking below 15,538 before all is said and done. So for tomorrow, we're right now continuing to give the benefit of the doubt that these levels will hold. The market will return to a rally position and start breaking back above all of the moving averages and the resistance levels that that were support coming off and now resistance going back up. A continued break to the downside. Here are the support levels. And that's the no break zone, as we've discussed several times. So we have both of our marching orders for whatever the market decides it wants to do. It was very tradable today. The moves were very clean and they were very recognizable. And I would say continue to follow the moving averages, the Fibonacci support and resistance, and the preferred and alternate views on Elliott. That's where I'm going to leave it for right now. The next update will be on Tuesday, the 14th.